Hey guys, this is Mr. Roxy coming at you live from Palm Beach in Florida. It is Sunday, it is August the 21st, and I am going to spend a few minutes to explain and tell you why I am still bullish on Occidental Petroleum. But before I do that, I also want to share a little bit of sort of housekeeping with you in terms of things that I look for when I explore an equity. Some of it is obscure and abstract, some of it is easy and anyone can do it. But stick with me for a few minutes and I'll kind of walk you through what it is that I usually do when I look at a stock. So, of course, in this particular example, we're going to look specifically at Occidental Petroleum, your favorite stock and mine. And we can see on Friday we closed at $71, which is pretty good, very close to its all-time high of $74. Now, a couple of things just at a quick glance. And by the way, this particular video is meant to be educational and informative, and I'm using Oxy as my example. Firstly, we can see on the right-hand side here that Occidental over the past 3 years, and especially of late, has outperformed the indices. And here I'm comparing it to the Dow Jones in light blue and the S&P 500 in purple. But these are things I look for when I look at any particular stock. And there are stocks that I look at buying from time to time. So one of them that I started investigating just yesterday is a REIT called PMT, which was introduced to me by a good friend. And I had a quick cursory view of PM as in mother T. And I looked at that particular REIT yesterday, and there's not many reasons why I would not necessarily open an investment in that REIT. However, it would be like a savings account, a high interest savings account, because the REIT pays a dividend of almost, that particular one pays a dividend of almost 11%, even though the stock price might not move much at all. So anyway, a couple of quick things here. So I looked at the graph on the right-hand side. I'm looking at the PE ratio, 6. I'm looking at the 52-week range. Is this expensive in terms of timing for me to get into the stock or not? And then institutional investors right now up to 82.5%. Of course, the short interest has also gone up a little, 6.6. Those guys are getting squeezed a little bit now because of the jump that we saw on Friday of almost 10% in the stock. So let's just look at a couple of easy things first. I've made many videos about this before, but you know what? A quick refresher is not going to do any harm. How to read a balance sheet. This is really simple. People look at the balance sheet and sometimes there's pages and pages and pages of information and you think like, where do I even begin? Well, it's actually really simple. What you're looking at is assets, and they have to equal the liabilities and the shareholders' equity. So if you think of it purely from a personal point of view, to make it a really simple example, let's say for a personal balance sheet, your assets might be your house, and your house is worth $100,000. And then your liabilities might be a $60,000 mortgage on that house, which means your equity is $40,000. So $100,000 equals $100,000. The $100,000 in my example is your house, which is your equity, 100,000. And the other side of the ledger would be effectively the liability of $60,000, which is the mortgage, and $40,000 would then be your shareholders' equity, or the equity that you hold in that particular position. So it's not too complicated. Now let's look at Oxy here as an example. So you can ignore all the different lines because, as I said, sometimes it's pages and pages and pages. And I'm going to tell you specifically what I'm looking for when I look at the balance sheet. The first thing I look at is current assets. So here we have current assets of about 10 billion, and then current liabilities, almost 10 billion. That's flying too close to the sun. So at a glance, when you look at Occidental Petroleum, you go like, man, if you have about $10 billion in current assets and $10 billion in current liabilities, that's a little bit of a tight squeeze. But it gets even worse if you look at the quick ratio. I'm going to talk about that one in just a second, so bear with me for just a minute here. Some people ask me, hey, Mr. Octi, when Occidental Petroleum or any other company buys back stock, where does it go? What happens to it? Well, it's on this line item here called treasury stock, right? So it's no longer common stock available in the market. It's treasury stock, which the company is basically then sitting on as part of its stockholders' equity. So coming back to my example that I used just a minute ago, this is called the current ratio, and there are ratios that we need to pay particular attention to. So the first ratio I shared with you was PE, the price earnings ratio, which is about 6. And the next one I'm sharing with you here is the current ratio. The current ratio is just fairly simple. current assets divided by current liabilities. Now, on the previous slide, I showed you that Occidental's current assets exceed Occidental's current liabilities, which means that the ratio is greater than 1-to-1, which is favorable to Occidental Petroleum. Now, over here on the left side, I made a little note. I said Oxy has a debt to capital ratio currently of 44%, which is in line with its industry peers. The company's quick ratio, it's not actually 0.91, it's just over 1. So this number is not correct right now, but anyway, it's around 1-to-1. And that shows you, if it's less than 1, that there are not enough liquid assets to satisfy current liabilities if operating earnings are unable to. And the difference between these two ratios here, the quick ratio shows you quick assets, which basically is cash and cash equivalents compared to current liabilities. And that number is not favorable to Oxy at all. Now, you can't see it here tucked away behind my pretty picture, but the cash and cash equivalents on Occidental Petroleum's balance sheet is only $1 billion, which means they only have $1 billion in cash, and they have almost $10 billion in liabilities. So the quick ratio is horrific, even though the current ratio is pretty good. Does this matter in the greater scheme of things? You bet. You want a current ratio of 1-to-1 or better, which is pretty much there or thereabouts where Oxy is right now. But in addition to that, we can also look at the interest coverage. And right now, Oxy's interest coverage is about 6.4. So it'll have no difficulty repaying its debt in terms of where we are right now. Then I talked about the PE ratio, which is about 6. And I've mentioned this many times in videos before, but the PE ratio, the price earnings ratio, right, for the S&P 500 has historically ranged from 13 to 15. I would always look at the higher end of that guidance in terms of the number that I want to compare with. So for me, just as a benchmark or as a fundamental number that I want to look at, the PE is 15 for the S&P 500 index as a whole. So I want to look at stocks particularly that are of interest to me that have a PE ratio of less than 15. It's not an absolute number, the same way no ratios are absolute numbers, including the current ratio, the quick ratio that I just shared with you a minute ago, but it's a guideline, right? And it's an easy one to use because you can say, what is the PE ratio of Occidental Petroleum? Well, it's only 6. What does that mean? So I've added an example here, which is the other way around. A company with a PE ratio of 25 is trading above the S&P 500 average because it's trading at 25 times earnings. So by implication, then you can see that Occidental is trading at around 6 times earnings, which means Occidental, even at $71, is still cheap. Now let's move into something a little bit more difficult, and I'm not going to spend too much time on this because I've done videos on this before as well. But these are things that I look at, which you probably, if you have any sanity or if you want to retain your sanity, then you probably should ignore these two things I'm going to discuss with you right now. The first thing is Black-Scholes value. Now, Black-Scholes is an algorithm that is used by corporations like Occidental Petroleum. Anyone that issues stock and offers stock options or restricted share awards or restricted stock awards or some performance share units or whatever as compensation to, for instance, executives. Then you say, what is the cost of those stock options to the company? Now, this is kind of abstract and a little bit obscure. They need to do this. The issuer, so Occidental Petroleum, needs to do this in order to comply with expensing requirements as it relates to FAS 123, which is a rule that they are required to use in order to expense the cost of the options. I look at this because it gives me a quick little snapshot guideline. There are some things that we know on the Black-Scholes algorithm that's really easy. What's the stock price? What's the exercise price of the options in the future? So stock options are derivatives, right? Because it has a derived value at a future date. What's the time to maturity? 3.5 years in my example here. In other words, when can Vicky Holland actually get these equity rewards, like performance share awards or whatever? What's the time to maturity? I know these things. What's the risk-free rate? Well, I can look that up if I want to. The easiest benchmark to use is basically just to take the treasury and say the risk-free rate on the left side here is commonly considered to be equal to the interest paid on a 3-month government treasury bill, which is currently about 3%. So I plugged in 3.5 or 3% as my annual risk-free rate. And the annualized volatility you can just find off that stock chart picture that I showed you right at the beginning. In fact, let me just go back there for a second. Over here, right at the bottom, it says historical volatility, 56.4. Obviously, it fluctuates, but anyway, that's the number I'm going to use. And this gives me an idea of what the cost of the stock or equity is to Occidental when they offer it to their employees and insiders as part of their executive compensation. So what I did here, just by way of two examples, I said, all things being equal, when the stock price was $12, Occidental could expense it at about $1.09. And when the stock price dropped to $9 per share, that was early in 2020, Occidental's cost was only 51 cents. I use this basically as a guideline just to see for myself what's going on here. The other thing that I look at from time to time, which you'll see in the news as you follow equities like Occidental Petroleum, is that sometimes, like for instance, in this particular instance, Carl Icahn, on behalf of Icahn, said he was going to sell some stocks. This happened in March 2021, so just over a year ago. And it said all such sales were effected pursuant to a Rule 10b5-1 trading plan. What is a 10b5-1 trading plan? In the United States, if an executive doesn't want to sell stock and just quickly crash the entire equity of the company, in other words, let's say the stock price is $10 and I'm the CEO and I dump a few million shares into the market unexpectedly, the stock price might just crash from $10 a share to like $1 or $2 because the CEO is suddenly selling all these shares. So what you do is you file with the SEC a 10b5-1 plan in order, it's a disposition plan, basically saying that every quarter I'm going to sell 200,000 shares, or every quarter I'm going to sell 250,000 shares. So at the end of the year, by the end of the year, after 4 quarters, I would have sold 1 million shares. That way I'm announcing it up front, which does two things for me. Firstly, it doesn't spook the market. So the market doesn't go like, whoa, why is Rudy, the CEO, quickly suddenly selling all his shares and dumping it? Maybe I should sell mine too. And the other thing it does for me is it removes any potential accusation or a look of impropriety action by the CEO where you're saying, is this guy manipulating the stock price by entering and exiting positions or whatever the case might be? Who are the people who sell with 10b5-1 plans? Well, typically it's the C-suite. And if you think of Icahn as an example, when you have a few board directors that you effectively placed on the board of the publicly traded company, and in addition to that, you're one of the largest shareholders, then it's worth your while to file a 10b5-1 disposition plan because otherwise you can tank the stock. It's common for insiders to do that. And usually it would be 10b5-1s would be restricted to the CEO, the executive suite, people who can actually impact the company's stock negatively if they just dump a whole lot of stock. Well, this just in. Actually, it's not just in because by now you all know about this already, but the Wall Street Journal reports that Warren Buffett is not expected to bid for control of Occidental following the boost in his stake. What do you guys think? Maybe you can tell me in the comments because it'd be interesting to get your thoughts on this. I actually personally think that Buffett is moving to take over the entire company. But it doesn't matter what I think. You can tell me what you think, and then we can have some discussion about that. Approval, though, says the Wall Street Journal, to buy up 50% of Occidental Petroleum simply enables Berkshire Hathaway to avoid bumping up against the Federal Energy Regulatory Commission imposed limit. The Wall Street Journal says that's why he did it. But now, if you're an old guy like me, and by the way, this is just sort of 10, 12 years ago, we might remember that in 2009, 2010, Berkshire Hathaway did exactly the same thing as what Warren Buffett is doing now with Occidental Petroleum when he started buying little bits and pieces of Burlingame North Santa Fe Railroad. And, he's kind of done this before, and what's the old saying, a leopard doesn't change his spots or something like that. Anyway, maybe I'm screwing up my analogy, but you get where I'm going, right? He's done this before. Is he doing it again? You guys tell me what you think, right? But for sure, we've been benefiting from this because just his current Oxy buy and the news on Friday that broke about his 50% permission helped to bump the stock up 10% on Friday. Occidental's relative valuation is almost back to where it was before the Anadarko takeover, at about 4 times forecasted cash flow. Of course, as you all know, Buffett helped to underwrite that deal with his preferreds. So what are some key points here? So let's just look at this quickly. To be fair and to be honest, when it comes to Occidental Petroleum, we have to acknowledge that high prices are what enabled Occidental to pay down the debt, right? It's not as if the Occidental management, who have done a good job paying down debt, managing operational costs and expenses, they've done a really good job on that latter part, right? Managing their costs, their break-even point, etc. But really, it's the high prices, which they cannot control at all. That's what helped them to pay down the debt. So half of the sort of good fortune that we've experienced with Oxy is from the high stock price, oil price, commodity prices. And the other half is because of good management, right? But we have to acknowledge that Occidental is still producing approximately 1.1 to 1.4 million barrels of oil equivalent per day. That has not changed much. So it's the high prices that have really helped us, plus management's laser-like focus on restoring the balance sheet and paying down debt and managing expenses. Now they've partly restored the dividend as well, and they've started buying back stock. These are key points for us because we benefit from these actions. Now, this is where it gets really interesting, right? The debt reduction plus the dividends kind of being restored, plus the stock buybacks, means that Occidental is approaching the trailing 12-month $4 per share trigger. That's the dividend trigger because that triggers an early call on the Berkshire preferreds, right? As soon as the dividends get to like $4, then we can have an early call on the Berkshire preferreds. If, based on current math, they buy back about $1 billion of shares per quarter, then we might get there by Q1 of 2023. So here I'm basically making a little bit of an assumption, right? So you got to be careful when you make assumptions. It makes an ass out of you and me, right? Assume. If we get there by early 2023, then we can also expect net debt to be in the mid-teens, right? So, I mean, obviously management has been saying that they want to get the debt down into the mid-teens. So this was not too much of an assumption. It's actually part of their management strategy and executive planning. Then Oxy might have to borrow cash to pay Berkshire because Oxy doesn't have a spare $10 billion lying around. So they might have to borrow. However, if they borrow, then they might be borrowing at investment grade interest rate levels, which means the debt would be less expensive because the interest rates would be lower. And it would also be relatively easy for Occidental to secure some debt financing to pay the preferreds because effectively they'd have the support of the Berkshire board of directors. It's kind of a strong position to be in, right? So what I'm getting at here, as I said at the start, why is it that I'm still bullish on Oxy, even at $71 per share? I think it's a win-win-win, but I'd be interested to hear what you guys think, right? Why is it a win-win-win, Mr. Oxy? Berkshire's common stock plus his preferred plus his warrants already helps him to control any ambitions management may have. So he's pretty much in a position where he can almost put a brake on anything if he wants to in order to protect his own interests. And when he protects his own interest, arguably he's protecting ours as well, right? The largest shareholder of the company is not going to do anything detrimental to his own position. And if it's beneficial to Berkshire Hathaway, it's arguably also beneficial to us. Buybacks provide an uptick for common stockholders, right? So it's not only Berkshire that benefits from the stock buybacks, but us as well. In addition to that, his warrants are already in the money. So if he wants to, he could just flip them into common and hold on to his common stock and preferreds, and then he no longer has warrants. He doesn't have to keep those warrants. Let's see what he does. I don't know. You guys know. Tell me. And if Berkshire raises its stake in Oxy to 50%, it'll be easier and less expensive for Occidental to borrow money. Well, that's kind of what I just said a minute ago, but that's why I'm still bullish on Oxy. Anyway, guys, I can't make too many videos on Occidental Petroleum because even though there's a lot of news, there's also no news because it's a continuation of a 2-year story now. But if you like my content, please hit that subscribe button and help me to grow the channel so that I can be motivated to do more of this stuff for you. And more than anything, I look forward to your comments because as I've said many times in the past, your comments are frequently more valuable than my content that I'm sharing with you. Anyway, that's kind of the macro view as to what I do. There's some easy stuff, the current ratio, the PE ratio, the stock summary sheet that shows you the current price, the 52-week range, all that kind of stuff. Super easy, right? Anyone can do it. You don't have to be a rocket scientist to find and invest in a really good stock. And then there's some abstract and obscure and really difficult things like a Black-Scholes algorithm and following 10b5-1 plans. You can always look at insider buying, right? If insiders are buying, that's a good sign. If insiders are selling, it's like, that's less good unless it's a 10b5-1, for example. But anyway, those things are a little bit abstract and obscure. You can ignore them. You don't even have to go there. If you actually dig into my library, you can find old videos of Black-Scholes algorithm where I explain the algorithm, 10b5-1 trading plans and things like that. Anyway, let me know what you guys think. Tell me in the comments, are you bullish still on Oxy, or are you exiting? Or if you're still bullish on Oxy, are you exiting before, let's say Q1 2023? If you hold the warrants, like some of our friends, Kevin Zhao, who's now a multimillionaire because of his single position of Occidental warrants. Kevin, I hope you are doing well. Anyway, it's just tongue in cheek, right? But it's good stuff, right? And tell me what you think. Tell me if you think you're exiting and when. Talk to you later.